So there is a Fireside conversation with Srinita Mitra from Grey Matters Capital, venture manager, Varun Jhaveri, managing partner, Evernile. So guys, I would like you to introduce yourself to the audience.
Hi, good afternoon. I know a lot of sleepy faces, but please gear up. Might be something interesting coming up. So I'm Srinita Mitra. I work with this in family office based out of South Asia with background and early beginnings in the US. We focus mostly South Asia and emerging markets, where we invest in emerging technologies and solutions, especially in financial technology solutions, financial inclusion, education, workforce participation, and very recently climate-related solutions. We have Grey Matters has about $100 million assets under management. I have personally managed about $40 million worth of assets under management under Grey Matters Capital. Invested in more than 20 startups in the last 5 years, specifically both D2C, B2B, B2B2C kind of startups. I am also an advisor to Climate KIC, which is a European accelerator. Over to you. Thank you.
Yeah, thank you. My name is Varun. I'm the managing partner at Evernile. We are a boutique investment banking firm. Fairly started recently. We are into mid-market. We facilitate transactions in the range of 5 mil to 200 million. Typically, our focus areas are three. First is healthcare. Second is digital commerce and consumer brands. And third is sustainability. We are currently based out of Gurgaon, a team of around 15 folks. Now we are expanding to Bangalore. And this is also one of the reasons why we thought that it would be good to have a chat. I personally spent last 10 years on the intersection of healthcare and investments, used to work with Asian Development Bank, used to manage a fund of around $350 million before, specifically towards healthcare startups. Prior to that, I was into management consulting. By education, I am an MBA graduate from IIM Ahmedabad. Very glad to be here. I hope, since we will be talking a bit more about the money, probably that will make all of us a bit more active in this session. Looking forward. Thanks.
Sure. So my first question to both of you is if we talk about the customer, the markets, they have changed drastically, and after COVID, the scenario has again changed. So what are the marketing trends, and what according to you is the landscape currently?
So the way we see the consumer tech or Indian consumer tech landscape, I think a lot of reports suggest that till FY22, it was about $100 billion, right? And by 2027, it is supposed to grow about $300 billion. That's a long jump. We are already in 2024. Whether we are reaching that goal is something that we are still evaluating. But couple of, since morning you have heard so many organizations, so many people talking about the trends, right? Some of the key factors, from these trends only has come out that financial services, fintech solutions, the adoption of that has led to a lot of these, jump in the consumer landscape, right? And what kind of fintech solutions that it has been personal savings, services, these are some of the key trends. Then it comes I think it comes from the fact that women have always been the decision makers, but it has never been highlighted so much. Like who takes care, who makes a decision about the household consumption, if I have to ask, right? So that has come up in prominence in the last couple of years, and the decisions that we are making, even the kind of smaller decisions, considering what kind of food, what kind of healthcare solutions, services that we need to take. Even just take, for example, influencer marketing, which is the key to a lot of the D2C kind of products and solutions that you keep on seeing through Instagram, Reels and others. Out of 1,000 top influencer marketing almost 45 to 50% are women, which is shaping your decision making, right? Then your growth of broadband in tier 2, tier 3 cities, OTT network, all these are, key insight driven aspects which is shaping up your behavior, your consumer behavior. I think that's where I will stop, and over to you, Varun.
As you were touching the topic of like women entrepreneurship, I would like to seek like, if we are talking about D2C market, right? In D2C market, many of the brands that are coming are women oriented. In terms of the TG that they are targeting is women. If we talk about like cosmetics that are going into D2C segment is half. And the TG like clothing is some of the thing that person are like investing on. So like, what are your views as an investor in terms of like FMCG or say like cosmetics? What are the segments that are growing, and also like what are the brands you see like will be increasing in terms of D2C?
Well, I think the way we look at businesses are, we absolutely love engaging with the businesses who have got their first principles right. That is, a startup at the end of the day is still a business. You need to make money, and if those fundamentals are right, if you really know, it can be probably like 6 months down the line or 3 years down the line, but it should not be like a completely crazy burning machine with thinking that there would be a magical source of channel that will come and you will get your revenue model right. So I think and this also relates back to the first question that you raised with regard to the COVID. I think after the COVID, and of course after, because in COVID all the strings were tied, and as soon as the COVID started going down, there's a lot of momentum, a lot of activity happened for a year. But I think after the sort of slump, I think what has really happened is the huge focus on the disciplined businesses coming up. And in that particular sort of era, I think D2C, consumer brands, they're doing, quite a good sort of job. Also because of the fact that now there is, one very interesting, or rather two very interesting, new distribution channels in place. So earlier, if you're a D2C, you would probably rely on marketplace to start with, put it out on Amazon. And then, as we grew, they made their own websites. Then there was this, whole offline era that, you need to have your presence in the offline stores. And then you had your Instagram performance marketing. Correct. And I think now the most interesting D2C channel that has really emerged is the quick commerce. So I think till the time the businesses, they're getting the fundamentals right, you exactly know how much money you are pumping, what is the type of revenues you are earning, where is going to be a break even. And trust me, these are the most simple questions, but these are those questions that mostly a large number of startups are struggling, to answer. And if you get it right, I think there is, and the way our thesis work is that we feel that, and we don't see it in very temporal small cycles, we see in a long term, like, what is going to be India long, 10 years, 20 years. We are very confident that India is a geography which is attracting a lot of capital and which will be attracting a lot of capital, looking at, the entire global winds. So if you're getting your first principles right, then there is a lot of investments, there are a lot of investors who are really ready to, pump money in.
So how do you segregate the, like, this is the brand that I want to invest on? Because what I am thinking is that today, right now, like startup is becoming a glamorous or like a fashion type of thing also. Like after Shark Tank, people are coming, making the deals but not getting the investment. And they are not even like they are returning the investment because they don't want to sell the equity. They have got the marketing right through like Shark Tank, or like they have got a good article like they have started or something. So like, what do you think? How do you segregate? Is this the idea that will, again, like it's working right now, that does not mean it will be working in 2 years or 3 years. So how do you think, like you are choosing a company, how do you think, like what are the segregation or the features that you look on?
I think we both can probably.
Yes.
I think for us, again, it's a very, sort of, it again depends from sector to sector. There are some nuances, but largely the playbook remains the same. So for every particular business, we do like a risk assessment, a probability assessment. There are, bunch of 6 or 7 bigger buckets that really goes into it. And for us, a top of it is whether they have really figured out what is their product market fit. A lot of people will be saying, but even the product market fit, the definition of that itself is evolving. Earlier it used to be only like, probably talking to like 20 odd customers, but now it is more about really figuring out whether the product market fit is for your revenue and profitability or not. And I think that's a, sort of a big jump that has happened. So revenues, financial performance, progress, your team, your product, what is your value proposition? And I think a large part of it is that when you talk to team, for like 1 hour, go and meet them for a couple of hours and ask them detailed probing questions, it really comes to light. As you said, Shark Tank is great. I think what Shark Tank has done is that it has given a lot of societal validation to people who are in entrepreneurship. Earlier there used to be a lot of taboo that, you want to do startup because you are not able to do ABC. Because you couldn't find a job, you are doing a startup. After Shark Tank, it is, more of an aspirational thing and acceptable thing, especially in the Indian society. So I think Shark Tank is great for, that validation and marketing overall. But I think in terms of the financial markets, the investment community, I think it has inclined more towards a disciplined approach of seeing startup more as a business rather than just as, one of the marketing things.
Adding to that, I think the other aspect of it, it's always from an investor perspective, we follow the money. So no matter how much your marketing is, of course your marketing is bang on, but if your product is really good, consumers are smart. They are not going to put anything just one time just to test it out, maybe, but for repeatability and scalability, consumers are smart. They will definitely follow that specific product. And that's what as investors we also see, whether there is repeatability of the product in a D2C chain as well. Now today, how the markets have shaped, and this is of course the Shark Tank piece is of course there, but if any of you read the Ken, they have recently done quite a few articles on, and these are actual figures that they have picked up from talking to companies in the D2C side. What coming to the point of lifestyle kind of product or a personal care product, 10 years back or 15 years back, nobody used to care what they are putting in that particular face cream or any of those solutions that you used to use or still use, right? But today people care about that. People want to know what am I consuming, what am I putting on my face, whether the apparel that I am purchasing or wearing, whether that is looking good or not. So all those pieces, that perception has changed, right? I want to take care of myself, and that's where the D2C larger chunk of the brands have come up, right? And there's a sharp change in the behavior of the pattern the entrepreneurs have developed their products as well. I think that is something to note, and that is something that you need to embed in your ethos and your organization as well. It's not only chasing the money from VC or PE, or even if you build a brand which is sustainable by itself, that gives a lot of validation to the entrepreneur. So it's not only about I want to be featured in Shark Tank, but building a solid brand by yourself by just figuring out the core that what my consumer wants. I think today morning when Rajiv was talking about what the 1 is equal to N and G is equal to, I forgot the formula. So I think those are some of the key aspects of building that brand. It's not only about chasing money, it's what you want to build.
Right. As we were talking about, so currently we have not talked about the demographic segregations. We are sitting in Bangalore, and if I talk about you are based in Gurgaon, if we say ki the D2C brands are coming from tier 1 cities, that will be wrong. When the D2C word came, now the startups or the companies that are coming, they are majorly from tier 2 and tier 3 cities, as we can also see, if clothing is there, cosmetics are there, jewelry is there. So being a woman, I know many of the brands that I am buying from are coming from tier 2 or tier 3 cities. They are the people who are manufacturing those. We also met some of these startups, the startup in Chennai was the Divine Foods. They have their manufacturing in Salem, and they are covering pan-India. So how do you think, what is the number of the companies in present scenario, what is the percentage of the tier 1 segment in terms of D2C and tier 2 segments in terms of D2C? What do you think? And how they have changed?
So that data point is, I don't have the current numbers, but in terms of presence of these brands, I think in the last couple of years, quite a few brands have come from the tier 2, tier 3 cities. It has been an organic a kind of journey for these brands as well. Yes, the segmentation use has been mostly tier 1, but with the growth and distribution and more like, I mean, penetration of broadband and internet solutions, I think there has been, again, an organic growth of an aspiration for tier 2, tier 3 cities, population to use that product and solution as well. So the way I see it, definitely this is going to grow. Now today, urban markets is about 60-65% of the entire, if you have to segregate it, and then becomes like 40-45% of the, or 35-40% of the market becomes from the tier 3 or rural city. And this is going to grow over a period of time. It's not a one-time, just for the sake of using the product or solution, it's going to grow over a period of time.
Success story like any of the brands that you have basically invested on that are from tier 2 or tier 3 cities?
Of course, but it's again, it's not D2C, it's B2B2C, or you can say that one, and that it's specifically in education services that I have seen. Even if you are from tier 2, tier 3 cities, the aspiration among the parents are there to give their child the best of the solution or activities that is available. So the move of a specific organization to those specific, and they are coming from tier 2 cities, launch the product in a tier 1 city and move to other tier 2, tier 3 cities across, right? And Bangalore itself is like there is urban population and urban poor population. So outskirts of Bangalore itself, you will find a lot of these locations where that kind of aspiration is there for to provide that kind of solution for the child. So education services, basically the services segment is something that I have seen a lot of growth, and this is documented in a BCG report as well, that in the last 3 years there is a 1.4x growth specifically in the services rather than the products. I think that could be, yeah.
So Varun, as we are, you are from Delhi NCR, D2C has a hub there. So what do you think, like what is the companies who are like marketing themselves and coming from the nearby tier 2 or tier 3 cities in North? So what is your take on that?
Well, I think, if you look at the D2C, I think it's a bit of a misnomer. Or probably, it's a new interesting trend about, saying that it's a D2C brand. But typically India was a hub of a lot of, and has been a hub of a lot of indigenous D2C brands. Like if you ask me, what is, one of the most popular D2C brand, it is Lijjat Papad. It is a D2C brand, but no one really said, no one used to use the word D2C. Nirma Sabu. Nirma, I come from Gujarat, I know, the story of Nirma, the founder, Karsan Bhai Patel. He used to go from cycle to cycle, from home to, sell that Nirma detergent directly to the consumer. So,
because of like digital,
absolutely. So
that was limited to that.
Exactly. And that is what has happened, is that because if you look at the genesis of most of the D2C brands, whether it is in Bangalore, Delhi, Rourkela, all of them at the end of the day, they are not focusing a lot on, innovating on the tech, which I think is the right thing to do. All of them are using the similar tech. And because everyone now has, the plug and play tech, I think that is a great leveler. So you will start seeing, and it is, we are already witnessing, like, we have been getting a lot of interesting transactions from places like Ranchi, from places like Rourkela, what I said, right? So I think what is happening is that now, earlier the hesitation was that product bana lenge, tech kaise banayenge. But because of this whole entire universal tech stack coming, and so many YouTube videos and so many communities, absolutely, everyone is now focusing there is a leveler, now I can focus on the product, and that is really the sort of, the core proposition in tier 2 and tier 3 cities. So because we have got this figured out, now what is a very interesting part that is going to be there is how do you really differentiate in two things. One is how do you optimize your bottom line by having a very strong backward integration with your manufacturing, and how do you really build out that front-end consumer engagement by building a very well-knit community. I think those are the only two differentiators which are there. Otherwise, every particular makeup, every cosmetic that is still getting, made in the same factory, to be honest. There are only 2 or 3 manufacturers. But the idea is that how do you really put it out, and how do you, engage the community and, make sure that it is loyal to you.
Very interesting topic. Like, 5-6 years back, majorly somebody who's coming up with a startup is an engineer, because he knows how to make a website, how to make a how to make a app. So currently, if somebody is not from the tech background, they can also make their app. They can also make by drag and drop options. So like things are changing. To conclude our discussion, what is the message of you, of both of you, to the startups and the budding entrepreneurs coming from Pan India?
I will probably just conclude with the exact thing that we started, that I think the era of, giving or rather cutting slack on the discipline of the business model just because that entity is startup is over. I think now, and which I think is great. I think the very fact that a startup should be a business first, at least should have a, good business model, at least know who the customers are, what they are going to be, ready to pay. I think that is, the big thing that is coming. And trust, when I say, because we do a lot of transactions in a space and, we do larger transaction, there is a lot of capital, that investors are parking, whether it's in equity, private credit, across the globe. Because in a way, the type of geographical advantage that we have, there is going to be an incredible movement of the capital that we are going to see at least for the next 3 decades. So till the time you have the right business going for you, whether someone says you are building a startup or whether you are building a business, it should not matter. Till the time you have got your first principles, the business principles right, I think you are bound to grow. And this is a great time either to, start a startup or, to be engaged with a startup. So I think this is the time, that you should really focus on.
Thank you so much.
Yeah, so I will end with this as well. Yes, of course, the first principle, scalability, profitability, all those pieces come into play. But if there is any white space that you have figured out, any solution that you think it's not present, I would say please take a chance and please try that out, because again, as he mentioned, that this is the right time to be in the space. And there are, as I also mentioned, that consumers are smart, money will follow you, even VC and PE money will follow you. If you really know which white space, which solution or you are targeting and that is going to make sense, definitely please try it out. I think that's how I will end. Thank you.
I will conclude it with it, like you should have an idea and a business plan also. So, thank you so much. We have a question.
Thank you for the opportunity to ask the question. Since we have been talking, twice you have mentioned about the smart consumers. So in the new era, in the current era, there is a conflict and there are 2 poles there. One is a conscious consumer, which Mr. Rajir talked about, and the other is a set of a consumer which believes into FOMO, right? So there are contrast strategies, and so how difficult, easy, or what are the new strategies the small businesses have to look into, which is a better strategy? I think these are the topics which need to be dwelled upon a lot, because the market is very complex. So omni-channel and omni-information, we understand that. So people say that, you should be present where the consumers are. But who's this consumer? The conscious one or the FOMO one? Or are we creating them deliberately? Or it is by choice that they are coming up? So just a thought on that, and I know it's a long discussion required.
So to answer that question of yours, again, that becomes going back to your target market, right? What space, what you are, trying to sell, what solution it is there. So I will give you an example. There is a Bangalore-based startup which is into, normal daily soap and others, but they are using the packaging that they are using is extremely sustainable, which is not going to go, it's a bio waste and it will integrate with the system. But there aren't a lot of users for that. I mean, constantly there is a pull and a push factor. I want to expand, but the moment I'm trying to expand, then the entire FMCG aspect is coming. So all those questions will keep on coming. But at the same, what kind of brand do you want to build? That also is a question. the entrepreneur herself, she's stuck at this particular lifestyle kind of a business. But the moment you want to go for scalability, we still do not have the infrastructure to build, or people having that extreme conscious mindset that no, this is what I would like. That's still not there. So again, it depends on what choice you want to, what you would like to choose. I think that's how to go about it.
Any more questions?
Hello, thanks. Sir, I have a very clear question. Like many startups struggling with the funds and everything. That's okay, but the concept is very good. They have a good market area, and they have idea is very good. But still, they are pre-revenue and looking for the person who can save them in the aspect of the money things. Because for getting a revenue, there are a lot more things are involved. So in that case, how you guys will help a startup if it's a pre-revenue thing?
So typically my suggestion, and we talk to quite a few pre-revenue startups. Of course, we are more in the growth sort of phase, but I think you might be pre-revenue, but you're not pre-customer. And I think that is, see, at the end of the day, it is a customer who is going to talk good about you, is going to use your product, and at the same time, when you involve him more, going to pay for your product. And I think that's a great sort of a canvas and great ground that you have. That can I get, hundreds of customer, probably to come, sign up, give you testimonials, talk about it on the internet, and give them for free. And that is how most of the big brands have been made. Like even if you look at a lot of D2C, they give out a lot of product samplers. Go hit the ground. I think a lot of times, and I have seen that particular journey from very close quarters, is that we sometimes do not really hit the ground. We do not go to the customers. We do not try to understand their feedback. We are hesitant in asking them if you are ready to endorse us or not. Can you come and, probably write a good comment on us on a Google. Trust me, all these things works out very great. Because at the end of the day, when you're raising money, exactly the amount of time that you have is first 30 minutes, right? And in the 30 minutes, if you can show that here is a larger community that has validated you, I think, the only thing that you need to probably convince is that these are the same people who are ready to gonna fund you, who are ready to gonna pay you once that funding comes into you. So I think don't think about the revenues as such in terms of being a pre-revenue, but think from the customer lens. I think if you're gonna get that validation, I think funding is just a part of the process.
Okay, thank you.
Perfect. So we had a great session, and we will just conclude it by a note like, you have an idea, you can start a startup, but do have a business plan to start anything. So that we have the venture capitalists also for that. Thank you so much, guys. Thank you.